This is the first video in a short video series where we're going to be creating an average retirement plan with 1.7 million in financial assets. Now you might be wondering why 1.7 million? Well, that was a number from a recent survey that suggested that the average Canadian household believes they need $1.7 million to retire comfortably. Now the banks, of course, they're in the business of selling financial products. So these survey results, there might be a little bit of bias there. If you have more financial assets with the bank, they of course earn more fees. But let's give them the benefit of the doubt and let's create an average retirement plan together with 1.7 million in financial assets. And let's see if that's enough or perhaps too much in retirement assets. Now don't forget to like and subscribe to this video and hit the little bell notification icon so that you get notified when the next video in this series comes out. Okay, so we're going to build this retirement plan together on the Plan Easy platform. Now we're going to start in this video with income and expenses. That's a very important part of every retirement plan. But before we get into that, let's kind of meet who we're working with. So let's go down to profile here. So we've got Bill and Louise. Bill and Louise are just approaching retirement. They actually retired last year. They left their employers and they're about to start CPP and OAS benefits this year when they turn 65. One of their questions is, should they delay CPP and OAS? They haven't started those benefits yet, and they're wondering if age 65 is the right age or if they perhaps should delay some of these benefits to age 70. So they're both turning age 65 this year. No defined benefit pensions for Bill and Louise. They own a home, they own a vehicle, no business or vacation or rental properties. They've got over $1 million in financial assets, so we're going to aim for that $1.7 million number. And they do have a home equity line of credit. We'll talk about that. And they've got assets in RSPs, TFSAs, and non-registered accounts. So let's start with income. Let's go up here. Now at the moment, Bill and Louise, they don't have any income. So we're just going to enter zeros in here where we have income. They haven't started CPP and old age security yet. They don't have any employment income. And this is where the average situation might be a little bit different. So your retirement plan, you might have some part-time employment income for the first few years, consulting income. You might be phasing into retirement with a part-time job. And so this is where even now the average retirement plan could be a little bit different. Perfect. So now we've got all our zeros in here. So no income at the moment. Let's go take a look at expenses. So if you look at Statistics Canada for 2020, they suggested that the average retirement income after tax was about $64,900. Now that was in 2020. So we're going to aim for around $75,000 in this plan. So a little bit higher than the average from 2020, but of course there's been inflation since then. So we're going to aim for about $75,000. And we're going to kind of build up that budget. Now we're just going to enter in some numbers here. So again, your situation might be a little bit different. But let's assume around $450 a month for property tax, maybe $300 a month for utilities. We've got maybe $90 or so or $100 a month for home and tenant insurance. Let's assume $300 a month for home maintenance repairs. So this could be new roof in the future, could be windows, could be just general maintenance, or maybe the fridge breaks, you need a new fridge. No condo maintenance fees, it's a freehold, and let's assume $180 a month for, cell phones and maybe internet. Vehicle payment replacement, so we need to plan for vehicles to get replaced. We'll assume Bill and Louise, they've got one vehicle, so we're assuming $350 a month will go to a future vehicle upgrade. Vehicle repairs, maintenance, I don't know, let's assume $100 a month there. And vehicle insurance, let's assume $120 a month. Fuel gas, maybe we'll assume $180 a month or so. They're not driving quite as much, and nothing for public transit or rentals. Now for personal expenses, let's assume that Bill and Louise are spending maybe $1,000 a month on food cleaning staples. Maybe they're each spending or combined maybe $200 a month on restaurants and entertainments. We'll do the same there. And again, of course, your situation could be a bit different. You might be spending less on one, more on the other. Now, vacation and travel, we're going to add a fairly generous vacation travel budget. So this is $1,000 a month, $12,000 a year. So that gives them some good room for vacation travel. Clothing, let's assume maybe $100 a month here. Personal care, maybe $50 a month. No insurance. We're assuming that they don't have any insurance anymore now that they're retired. For subscriptions, we'll assume $50 a month or so. Charities and gifts, maybe $100 a month. And doctor, dentist, specialist visits. So this is a little bit different for everyone. We're going to assume something like $100 a month for out-of-pocket sort of dental coverage. We're assuming because they're in Ontario that Bill and Louise get some pharmacare coverage through the provincial program. Now for miscellaneous expenses, let's add $500. So this is a fairly generous amount as well. This is $1,000 a month just in sort of miscellaneous spending. Now for savings and debt payments, no debt, no more savings. They're in retirement, so we're going to add all zeros here. Now maybe if there's room, we'll add to TFSAs, but we're going to figure that out in the final plan. We're not going to add it in here yet. So that gets us to a little bit over 75,000 a year. So that's perfect. So we're going to assume that this is Bill and Louise's retirement budget. Now the last thing we're going to do, we're just going to go over here to cash flow and we're going to take a look here. So right now, because they don't have any income, it's showing a gap in income, but we're going to close that with CPP, old age security benefits, and we're also going to close it with withdrawals from their retirement accounts from their financial assets. So home expenses, we've got a total of $1,300 a month, utilities, property tax, etc. Transportation, $750 a month, mostly for vehicle upgrades and repairs. And then a fairly healthy amount for personal spending. So food, cleaning, staples, vacation, travel, miscellaneous being the bigger ones. So overall, this is the number that we want to aim for in terms of average retirement spending. It's $6,200 a month, about $75,000 a year. And that's a fairly generous retirement budget. So in the next video, we're going to look at financial assets. We're going to look at debt. And then in the last couple of videos, we're going to look at government benefits like CPP and old age security, and then what their final plan looks like with that $1.7 million number. Now, don't forget to like and subscribe to this video and hit the little bell notification icon so that when the next video in this series comes out, you get notified. Thanks for watching.